So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling? Let's get this party started. So, 30th of November, 2020. No trade calls or recommendations are responsible for their own stuff. We're here for educational purposes only. Sessions are recorded. You'll get an email recording as soon as it's over. As long as you use it for your own personal use only, nobody will be blocked, nobody will be banned, and we will all behave as one big happy family. So welcome. What's going on, guys? If anybody has any questions or anything they desperately want to look at, shoot, and and we'll get to it. If not, I'll just start going through things. Just a reminder, Q&A. Just I'm the only one who sees it, so you can type in freely, no problem, and I'll get to the questions as soon as I can. So here, funky day, right? End of the month. Talk about a lot of equity selling, rebalancing, month-end rebalancing. On days like today, you could see some funky action, right? You could see days where charts aren't really in sync, or the usual correlations aren't necessarily in sync, and that's just due to these rebalancing flows going through. So don't read too much into it. The important thing, right? The important thing here is that basically not don't try and read too much into it, right? Don't write and read too much into it, and especially don't fight flows. Will, did you just try and come in as a guest? Is it you or is it another William? Am I going to have to boot him out? Okay. How do I know it's you? Where do you live? Joking. Joking. So let's do this. So again, here, equities, another vaccine Monday, right? So basically, we talked about this range, right? We had the pump all the way into these highs on the initial vaccine news, and then we said, as long as we're inside this range, nothing much matters, right? There's really nothing to write home about, okay? And what happens? We got another vaccine headline, and what happens? Markets are trying to move back to unchanged here, right, to where we closed, where we opened, but rather, sorry, where we closed on yesterday. But again, what to say? You know, if anybody has anything, hey man, how's it going? If anybody has any new trades or anything that's changed, you know, let me know, because there's really nothing happening. And this is the similar situation, whether you're looking at the YM, right, which has been stronger. Remember, our trade has been, if you had to have a position on, and we didn't want to have a naked position on unless it was tactical, was to be long Russell, long YM against the NASDAQ short all the way through the election. That's worked out. But if you're looking for a new trade here, really, nothing has changed. And here comes NASDAQ, weaker, as we expect to continue to see that rotation out of tech. So the only thing that could be interesting for me in terms of new trades is still, as crazy as that may sound, is tactical shorts, right? We're looking at this as a range, right? And as far as I'm concerned, when we're close to the top end of the range, I have asymmetry to try and short because I've got a stop which is above the top end of the range. I've got a defined risk to the upside, but I've got a lot more room to travel to the downside. And if we're at the bottom of the range and bouncing, failure to break outside to the bottom, I want to get long because I've got a tight stop below the range low for a move back to the range high. And it's just ping pong as long as we stay in that range. Daily closes outside of the range, then something's happening, okay? But right here, despite the Moderna news, despite all the vaccine news, we're not, it's going to be hard to find something that's going to get the market to pump up and hold above those initial highs, okay? So a lot of people will be talking about the Christmas Santa rally. That's more towards mid-end of the month. Remember here also, we're coming out of that seasonal long Thanksgiving trade, right? And today is the day, either if you're trading Friday or today's the day to bail on that. So we might see a lot of trade. We might see some sells there with some systematic traders getting out of that trade. And especially if that's going to come in line with some rebalancing flows, then, you know, that could be reason to believe that we get some kind of a little bit of weight or a little bit of heaviness on equities, and maybe that gives us a chance to trade the downside a little bit. Here, the context hasn't really changed, so there's not an awful lot of new things to discuss. And this week, what's going to be interesting, as I discussed in the Sunday Outlook, I think, is Aussie and Euro. Euro because we're close to that psychological 120 where the ECB is being intervening verbally, right? Reminder, we're still structurally bullish Euro. And Aussie because simply it's at a key level, right? It's at a key level. If you go back on daily, right, you can see it much better. We had a nice failure. So ideally here, what we'd want to see again, if we are hungry for asymmetry, right? What we want to see is we want to see another negative close here, right? You would not short this with a tight stop above those highs as soon as we close at 5 p.m. because we got to get through the RBA decision. But you're looking for any strength following that doesn't continue to get Momo or can't accelerate higher as a sell for either into the RBA or post the RBA. And at that point, you're looking for things to come down. Now, where would you look where could things come down to? Well, there's a multiple areas, but funnily enough, you see how we've got, again, we're talking about those similar ranges, right? Similar to what we got on the equities. And because it's all the same trade, usually it's pretty much a similar trade, but especially when we're trading in this kind of situation where, rates are not going anywhere and, there's just all the central banks are converging to the same kind of policy action. There's not much to do, so it's all the same trade. So here, this is another thing I'll be watching closely, and I'm fairly interested in. I might get, there could be, you could try and be aggressive and short it today, but I just never like holding through the RBA. The only way you would hold, or at least I am comfortable holding these things, is basically by not, and I know this is going to sound funny, we've talked about this before, but not having a stop in the system. So that means, of course, you can get carried away, but what does that mean? You have to trade small enough so that you don't, because going into a central bank decision, right, whether you're long or short with a tight stop above these highs or a tight stop below previous day lows, right, you're just asking to get clipped, especially if you're not on a really good broker, with a bid-ask widening, you're going to get clipped, you'll get a bad fill. There's really no point. So the only way is either, you're watching it and you're hanging around, or if you're going to bed, you have to have a position that's small enough where you don't have to hold, you don't have a stop on the position, and, you're thinking, okay, worst case, was it going to move 1-2%? It's still not going to be a disaster. However, what is the consequence of that for me? And I'm talking about myself. The consequence of that is if I have to put a position that's small enough that if it moves 2-3% or whatever, it might be a snooze, it doesn't faze me. Well, what is the inverse of that? The inverse of that is that if it moves 2 or 3% in my favor, it doesn't really faze me. Does that make sense? So why bother, right? So the way I always tackle these things is because I'm not in U.S. time zone, I'm not in Australian time zone. I'll go to sleep knowing that this is a key level. This is an area where I want to be active if something sets up, and into very early London time, if something is set up, then I don't mind even chasing it a little bit with a wider stop if it's already moving, because everything, the ranges will have been delineated, and basically we know what we're doing with. So I feel no urgency or no need to try and get into a trade here on Aussie, but I'm very aware that I'm interested and I could be looking at something tomorrow. Okay. As we go, and again, guys, don't hesitate to ask questions. If we're looking at a little bit more tactical things today, and it's not a day to fight flows, but really here, I've just switched these over to the 4-hour charts. And what I have, as usual, I have the previous day range highlighted here. What we see is that stuff which is holding inside is fairly comfortably inside, and the stuff that's outside is trying to extend. What does that mean? Again, there is no point on the last day of the month, whether there's rebalancing or not, on something that's broken below previous day range and is heavy, to try and fade this. You're asking for trouble. We've discussed this zone a lot on CAD, with Will, and we said this is an area where we want to look for potential longs, right? However, what do we say? As long as once we've broken back below this area here, the stops below this low here, because it's not a specific level, right? All these stops are just too juicy to give up, right? And usually this is, we'd expect this if it turns to turn with a proper puke and a proper stop hunt. And here, the market essentially is still making, right, higher, lower highs and lower lows. So if this clips everything and then reverses, this is something which could be interesting, okay? However, looking at the same structure of the previous day range, if we look at Kiwi, if you're desperate, right? If the doctor ordered you have to take a trade today, again, I'd be focused on equities, but assume the order was on FX, Kiwi's probably the most interesting one, right? You see how it's had a very, very big extension, right? It really ripped. We said there's no edge trying to fade this. This is just taking out sucker shorts, taking to the woodshed as they keep on getting stubborn, because after we've broken around, there's just stair step higher. Sooner or later, this is going to turn, right? Because nothing goes from point A to B in a straight line, and you need to have some kind of two-sided action. So this could be an interesting reversal, maybe even tactically. And the way I would look at this is, again, focus of the previous day range here, right? You see we've got this 4-hour close. So if we get a negative close back inside previous day range, the short, assume it's just short, stop above these highs. You're talking about 12, 13 pip stop. You've got about 17 into mid and 37 into the bottom end of this range. That's an interesting trade for me, right? Even if you're not expecting much, even if you're expecting it to stay in this range, this is an interesting trade for us. Who's going to tell me why this is an interesting trade? I'll give you a clue. It has to do with something I drew earlier. What would we expect? Let me do it. And again, you could do, let's just draw this. What would we be not surprised to see with these kind of, again, trend lines, take them for what they are, because somebody's going to draw it like this, then you could draw it like this, then you could draw it like this. It doesn't matter. But when you see this kind of, exactly, when you see this area, right, if you get a break below previous day lows, it would not be uncommon for us to see it reverse the whole extension here, right? So what does this mean? We always talk about, risk reward, etc., and whether a trade is high odds or not, right? Here, the risk reward into mid or previous day lows is fairly decent. In the context of the last day of the month, etc., it's probably not a super high odds trade. But what's interesting is, despite the fact that it's lower odds because of the context, if this breaks, the payout is awesome, right? So you're talking about that 13 risk or something for a potential 200 reward, 300 reward. So that the lower odds is compensated by the fact that you have a higher payout or a higher potential risk reward if this gets some traction. Does that make sense? Now, this is also an interesting area, because if you just look at the chart, you see how that's a base. This is that whole kind of low liquidity grind higher from this breakout of this broader kind of range we'd set. Remember, we talked about this range. So again, this could unwind the whole move. Very, very interesting. So I think also the Kiwi is an interesting chart. Does that make sense? Do we have any comments, any questions? Did anybody take any trades today? Has everybody just been sleeping and taking it easy? You shorted NASDAQ. A couple of guys shorted NASDAQ on the ramp. I'm a bad influence on you, right? Yeah. So again, here we're kind of hovering. Now, bigger picture, remember what we talked about last week, right? We said, I don't know if Eric's in the room, but we talked about the fact that be careful with gold. Be careful with getting very aggressive trying to buy that 1800 on gold because it just looks almost too good to be true. Everybody coming in, you get a retracement into the 1800. Again, this is what we were looking for. We said, watch out if we break this base here, 1800 is going to come quick. And then we kind of stalled and we hovered here, right? So what do you have? You have the usual kind of pikers, for lack of a better word, are coming in because they've read 2 books on TA and they say, oh, it's a round number with a 200 moving average, you must get long, right? Well, you know, when the chart base is like this, when you put in these tiny days and closes so close to the lows, you're asking to get your stops taken and you're asking to get slipped if you get long with a tight stop below those lows. We know that gold rarely reverses, especially if you're looking at it on a daily with tiny candles. You get exhaustive candles with long wicks to the downside, long wicks to the upside if you're looking for shorts. So here, again, we said watch out because the 1750 could come quicker than most people could blink here, right? So here, this is an interesting zone to see what happens. Again, bigger picture. Don't be surprised with this. We talked about the 100 on the weekly and the 200 on the weekly and the 100 on the weekly, which are coming in line pretty much with the 50 fib retracement and the 61.8. So this is a very interesting zone should we get a big puke. And a lot of people are talking about the fact that Bitcoin's going to puke because it's too high, it's too public. Everybody's talking about Bitcoin, and therefore, everything's going to puke, and we get to buy gold. Maybe, right? Remember what we said about Bitcoin. Bitcoin is there's just too much institutional interest coming on board for the dips not to get bought, right? Over the weekend, we've got Guggenheim said they're going to buy something like 500 million worth of Bitcoin. We've talked about the fact that Square and all these companies are pretty much eating up buying every Bitcoin that's produced every day, mined every day. So I wouldn't bank on that. Clearly, if we get a decent dip on Bitcoin, that'd probably be an interesting buying opportunity. But I look at each chart individually. I think it makes more sense. So here, let's see what happens with gold. We'll be very, very, very focused on this. Reminder, we have one of our favorite setups is always to look at that gold seasonal play, right? We've traded this a lot in the past, and basically we're looking at getting long the December see these kind of you get these dips around the end of the year. You get the ramp right into the Fed meeting, and then ramp for those bullish seasonals in January, February. So again, it's something which is on the radar for us, and we'll see what happens there. Again, this year could be a little bit funky, but that's something which I would be watching and I would be focused on. Yeah, last year it traded early. It started to ramp up in November. So this year's a much nicer setup because we're holding heavy here, right? Yeah, exactly. And again, there's not a lot going on and especially on a day like today, you have to be very, very patient. So what are the themes? I mean, the bigger themes developing here, it just seems that everybody is a dollar bear. All the banknotes, everybody's talking about USD bearishness, structural USD weakness, the whole of next year and so on, which to us seems obvious. There's no big change there. And people are waiting to see if something happens for FX vol to pick up or vol in general to pick up. But unfortunately, right, we don't get to choose the hand we're dealt. So it's just a kind of a wait and see here. Now, keep in mind that I have zero interest in trading GPB unless it's on a news headline. And even then, next couple of days, we're likely going to get all kinds of stuff on the wires. with Brexit. So I think there's very little edge because the last thing you want to do is get caught on the wrong side of that. And apart from that, that's pretty much where we are. I mean, this morning there was really nothing going on. Either you came in position for something, but it's a tricky one, right? Yeah, I was looking to see if something set up on Aussie and Kiwi, but just nothing set up. I mean, Aussie was too late. Nothing set up on Kiwi. At a certain point, I was looking at Euro JPY because remember this is a really interesting zone. So if we get a reversal, this could be an interesting zone, right? Remember, we always talk about the fact there's no such thing as triple tops. So here you'd probably expect it to break, but just keep an open mind. You know, what that means is that at this point, this is not an area where I want to get stuck on the wrong side of the trade, right? Because here, what likely is going to happen is either we continue to fail here and there's probably going to be an interesting long opportunity, or we're going to break out to the upside, right? Ramp up, catch some stops, and then all of a sudden be in a position to buy the pullback with a very, very tight stop for an extension back into this previous area. So this is another area which is interesting, right? Because you can you can trade this with far tighter risk. That means both to the upside if we break up on any move down, or on any kind of failure here to the downside, right? And you know, there are a lot of different targets you can look at here to the downside, but it's an interesting zone. So here on this kind of market, it's more a question of trying to get a feel and highlighting zones that may be of interest rather than really forcing trades, because to a certain extent we're technically unemployed unless you get some vol, you get some movement, you get something to do. Yeah, Ray, crude, I'm just not that interested on crude. There's just too much wheeling and dealing, and especially the last day of the month with such a slow tape. Last thing you want to do is get caught off guard on crude. So it's just one of those days where you have to be patient. Another thing, again, we talked about the 120 mark. So I think this is a zone which you want to, and you know, maybe some of these trades set up once we get through month end into tomorrow, but similar to Euro JPY, this is a very interesting zone. So it's one of those days where you're looking, right? You're looking, you're stalking, you're trying to highlight zones that may be of interest. Well, I mean, here in terms of sentiment, you know, we're almost full retard again, right? Because, you know, you see that fear and greed is bid up, no fear, market can't go down. You're getting the usual free money open on Sunday, right? See all these gap up on ES, on NASDAQ. It's just, you know, it's just the free money trade. So, and again, everybody's going to be up. But keep in mind that unless something drastic happens, there's no reason why you shouldn't be buying the dip, right? Now, then there's a question of what is the dip, right? Some people consider the dip 5 points, and some people may consider it 500. But you know, broadly speaking, especially if you know, COVID cases mounting, social unrest mounting, okay, but the vaccine sooner or later is going to hit, right? Biden is going to come with all kinds of stimulus plans and stuff. Yellen is in Treasury, right? So it's only positive stuff. It's only positive stuff. And now that Mnuchin has asked for his money back, it's pretty much guaranteed that the Fed's going to do more in December. Now, if the Fed doesn't do anything in December, then maybe the market could get a little bit of a rude awakening. And it's going to be interesting to see once we get back towards the back end of the year to see, because, you know, if there's more talk, if you think about it, right? And if the Fed doesn't do something, if Biden is talking about going through with the increase of taxes, et cetera, right? Then why wouldn't you want to lock in some better tax rate? You know, that could be a factor clearly. And there's also the whole JPM talking about the fact that there's 150 billion for sale in the rebalancing in November, and that if the market doesn't pull back or have a correction, we could be looking at another 160 bill in December. So, you know, I wouldn't necessarily want to be pedal to the metal, gung ho long equities into the end of the year, holding long over the holidays. At least, you know, that's definitely not what I would be looking to do. Hey, how's it going? Welcome. If the Fed does something, is it better? Is it the better trade to be long rates like 10? Yeah, I mean, the question is, how far can that trade go, right? And also depends what kind of trade you're putting on with what kind of time horizon. And you know, if you need, you know, because probably you'll probably get ultimately, if they keep on doing something, et cetera, you'd expect the bang for the buck to be either, if you know what they're going to do, you know, if they announce something like when they announced they were going to buy junk and all that crap, you know, all the junk ETFs went wild. But probably the better bang for the bucks is just a very plain vanilla, just buy equities, right? Do you see what I mean? I don't know if you have another, but it's probably just buy equities is the easiest trade. A lot of people here still looking for the uh, the bond bull market to break, right? And but you know, I've been hearing that for a long time. You know, we traded back a couple of years. You know, we were short ZBs. We got a nice move down, but right here, what are you gonna? You know, it's yeah. I mean, there's some room to go, but if they keep on pumping like this, it's probably just going to be equities, right? It's going to be the cleaner trade. Now, the question is, at any point, you could get a little bit of a hiccup, right? And what happens if we get a little bit of a puke on equities? Well, one way to structure that trade, saying which we were talking about, was to try and bet exactly on the Fed doing more, on Biden doing more, etc., by not having a naked position on and just trying to trade that long Russell short NQ, right? So again, I'm more than willing to discuss ideas, but if you think about it, I find it I find that a really good way to express the view, because as we come out, right, and all these programs, they're meant to help, you know, the smaller man, the economy, the smaller business. So the biggest bang for the buck is probably going to be on all these zombie small caps. Like, forget the fact, unfortunately, this is the reality we live in. Forget the fact that 40-50% of the Russell is pretty much dead man walking, right? But that looks like the biggest bang for your buck. And if you get all these programs coming in from Biden, if the Fed's doing more, and at a certain point, you also have more regulation, right? More regulation on big tech, et cetera, something, then probably that's the best way to not be completely to not miss out. But also, it means that if you get a sudden disaster situation, you know, you've got a short leg to the trade too, right? Now that trade was a lot more interesting when the small caps were smashed, right? Now that they've rallied, what have they rallied? Are not count 20%, whatever. It's a little bit richer, but you know, so but I think that's probably some kind of pairs trade like that is an interesting one. or the other one, as much as which is the most public expression of that trade, is if the Fed continues to do something and Janet goes full loco, buy gold, buy Bitcoin, right? But again, there'll clearly be, I think that unless, again, the big question is, are we going to get some kind of inflation? But the Fed has told us, like, even if you get a 2-3% print, even if you get a 4% print, imagine complete shock and horror. You get a 4% print. You know what the Fed's going to say in the press conference? It's transitory. We're not sure. They've already said that they're going to let it run hot. And even if it runs hot, you know, everybody's going to blow up if they start raising rates, right? So I think there's always going to be a bid under the bonds. And remember here, we talked about this, how quickly Bund went down to negative, and it can't happen. It can't happen. Same thing like the JGBs then on the Bund. Well, even the bond king himself got massacred, taken out to the woodshed on the Bund trade, right? So personally, after JGBs, after the Bund trade, I really don't want to be fighting the U.S. bonds, right? But again, first of all, the road, the how far can they go is probably less than some of the other stuff, and then it's just, they're probably going to end up killing the bond market in general. So you might be stuck with something, not a lot of liquidity. Then you get some kind of headline, and I don't know. It just seems like it's a shame, but it seems like a it just looks like saying, it looks like basically they're doing what, the BOJ did. They're just killing the bond market. So it's a tricky one, to me at least. Do I remember what caused the sell-off in 2018? I'm not really good on those things because I focus more on levels and stuff, but who remembers the 2018, man? You're really, I'm getting old. I can't remember what broke in 2018. I can't even, which wasn't that the Volmageddon? Oh yeah, okay, that was that was Powell the first time, right? That was before he got slapped back into shape, right? Yeah, so that was the Fed balance sheet. And you see what's happened every time they try and do something, right? So it's a tricky one here. It's a tricky one. Yeah, to a certain extent, these are kind of the worst times because as traders, we need to have movement in general. You need to have some kind of vol, and here the market is not doing much. It's not giving you a lot of opportunity. On the other hand, if you're trying to go by thinking about things rationally, right? You think this is crazy, but remember what we said. We discussed this live, right? And if anything, guys who are in here, it's really important to internalize that. Who remembers what we said down here when Powell came out with all the measures and stuff like that? We said something really important at the beginning of the year. We said, not only could this be the low of the year, right? But do not be surprised if this ends up being, right, a structural low and we ain't coming back to retest that at all, right? And the other thing we said is, don't be like the suckers who kept on trying to short all the way up, not paying attention to what what policy was. And here it's very clear. And we know that on the way up, they already have clearance and they set up programs to buy stocks too, right? So everything's in place. So you can't, as much as you want to, you can't sit here looking for the world to end. You can't, as we always say, you can't show up for work every day looking for a 10 sigma move, right? It's not a smart way to spend your life. So clearly here, we're stuck in this situation. However, we have gone up a little bit too quickly, and it would make sense to have a correction. That's why on one side, this may be boring, but I think it's almost like a gift where we are, okay? Because imagine it kept on going up exponentially, stupid, right? Every day, gap up, stupid. Then you'd be in a situation where you're a sucker if you try to fade it because you're going to get run over. And on the other hand, you feel like an even bigger sucker if you're trying to chase all these gap ups open because you know sooner or later those things are going to fill and you're going to get in trouble. So here, I think we almost have a little bit of a gift because we have the potential for that buy the rumor, sell the fact event, and we have a defined range. Does that make sense? Right? When you're in a situation where you don't necessarily have to fight flows and you have a defined range, it makes things a lot easier to be aggressive too, right? And here, we pop up, everything's great, Biden wins, vaccine, etc. And here, Trump semi-concedes, we get more vaccine, and what's happening? Again, it's silly to say, but this feels like, as we said, we've been trading NASDAQ. It seems like the gift from the gods, right? You're waiting for Biden, you're waiting for the vaccine, and the top is in. Not forever, but just for a little bit of a correction or a bigger correction, right? But not a structural top for the start of another 10, 20-year bear market. It could happen if they lose control. But that's not a decision we can make here. That's not something we can necessarily forecast unless, don't give me any hate mail, you're into, Elliott wave, super kind of fortune cookie crystal ball stuff. Right here, all we know is that we've moved very, very quick. We have a bunch of unfilled gaps to the downside. We've had a little bit of silly action. The market continues as it always does, but even more aggressively here to pump up outside of RTH. And here we have a situation where on all the massive good news that we were waiting, vaccine, Biden, etc., we can't break higher as more of that good news is coming. So all we know is that if you can't take out these highs, you have very tight risk to play for a little bit of a correction into the 3,500, which should be solid, right? You've got this descending trend line, you've got a horizontal level, you've got the moving averages starting to move up here. But again, this is a trade I would always take, right? Shorting 3630s, your risk is above 70 and you're looking for, 60, 80 points to the downside. It's an interesting trade. Now, of course, you have to size it correctly, but it's not an uninteresting trade. Okay? And again, even if you're still short the NASDAQ, but here, the same thing on NASDAQ, we traded this pretty much every day, right? We got short, took some off, added it back on when it came back below the 12,000, etc. Let it go. But now, once again, it's at an interesting zone, right? If we get some selling, if you can short and your risk is defined up here, but we can potentially come back down into that 1200, that's very interesting asymmetry. And the beauty of that is that you don't have to care what happens 1 week, 3 weeks, 5 weeks, 10 months down the line. You don't have to have an opinion, right? And that's what we're trying to do by looking at it technically, right? Technically, there's nothing magical about technical analysis. It's just levels of interest, right? Levels of interest that all kinds of traders, whether systematic, discretionary, whatever, are going to be looking at. And you can use those levels to try and structure defined risk trades without with the luxury of not having to have an opinion bigger term. Now, when we're at key inflection points, kind of like we're puking down in March, Fed comes in with all those programs, bam, there you can have a bigger picture structural viewpoint, right? Okay, this may be a structural bottom, except but right here, do you see what I mean? Does that make sense? Yeah, I mean here, Arno, it's take your pick, right? Here, the way that, and you've seen the way this is trading, right? Um, Either it's a big move and the ball and all the indices are trading together, or you're getting that kind of hanky panky and you're getting Russell and to a certain extent YM bid, ES and Nasdaq a little bit weaker, right? Um, ES has such a big tech component that it's likely going to trade with Nasdaq. So those are very, very similar trades. Now, you see also what I discussed last week as everybody was getting excited on the Russell is say, remember, all the people who don't do their homework, they think that all the indices are correlated, positive correlated, and especially, and they always get caught off guard with Russell because probably more than 50% of the time, especially this year, Russell's being inversely correlated with Nasdaq. And you saw how at the back end of the year we had Nasdaq lift a little bit and Russell stay heavy. So that's the relationship you want to watch. But whether you're looking at ES or Nasdaq, it's going to be very similar. It's going to be very, very similar. But it's slow. The mistake you don't want to do in this kind of market is start to trade out of boredom. Number one, big mistake. Or number two, because stuff isn't moving that much, put on bigger and bigger size. Because what tends to happen is, remember, we can also consolidate sideways, but once we have these slow times, we tend to get into shit. Then we break out, vol expands, and you do not want to be either caught on the wrong side of it, right? Or having just gotten so much trouble, such a big hole that you can't dig yourself out of. The other thing to keep in mind which is interesting to keep in mind, which I think you should, or everybody should, is that we're the last day of the month, right? So what does that mean? If you've had a good month, the last thing you want to do is to give it all back or give a big chunk of it back on the last day of the month, because you're going to feel like a loser and you're going to go into next month with a bad attitude, bad minds. You don't want to do that. Similar, if you're just break even on the month, don't go, okay, let me force it so I can get positive. Now, look at the other side of the coin. You could be break even, trading above break even for the month, and you could force it and end up negative. And again, you're going to feel like a loser. And if you're down on the month, the last thing you want to do is dig yourself into a bigger hole, right? So remember, the first day of the month, the last day of the month, they can be funky, right? Also in terms of flow, also in terms of institutional or flows going through. So if something doesn't feel right, if something doesn't look right, don't force it. There's plenty of time to trade, right? And also going into this week, it's Monday, it's the last day of the month. There's still plenty of trading to be done this week. The last thing you want to do is get caught offside on the last day of the month, on the Monday, dig yourself in a hole, get run over by flows, and then have to spend the whole rest of the week digging yourself out, or with bad taste in your mouth, or bad disposition when you're starting December trade. Okay? Any comments, any questions? No, I haven't, as crazy as it may seem, I haven't put on, I haven't opened any new trade today. Just nothing to do. My expectation was that it'd probably be slow and we might get something to do in New York. But again, we'll have to see. And, and Yeah, you might see these flows continue all day. So you might see euro be bid all day, CAD be heavy all day, irrespective of what happens somewhere else. Yeah, probably if you're looking to fade something in terms of FX land, if something's persistent, you'll probably have a little bit more edge after London shuts down for the day. Welcome to the Cash Open, ladies and gentlemen. So, yeah, I mean here it's just wait and see. I'm going to short some Nasdaq here. ES, ideally, you want to see it trade back below previous day mid. I like the Nasdaq. You see where the Nasdaq is hovering here. So we had the gap up open, and it's right stuck there, right? With just this popped up and it's hovering, right? So here, what you can look at essentially is you can look at this open price as the bull bear line, okay? So what does that mean? That means bullish above, bearish below. As long as price can hold above here, market is likely going to try and take a stab at triggering more upside and taking out stops above that gap up high. If especially we get through the first 30 minutes of trade, cash open, first hour of trade, and we can't hold above, then you would expect that the market is going to want to come out and take out the overnight lows. So right here, right, overnight highs and overnight lows. That's kind of like the decision mark. That's where pain could where we could get some momo if we clip upside or downside. And the pivotal level is that gap up open. Don't make it harder than it should be, right? Am I going? Well, I'm not positioning for the Fed at all here because the Fed is just not right now. There is no real either you have a position on if you want to have a structural position on already because it's everything kind of materialized last week, or here is not necessarily the time. You want to be tactical, and then we can see post the Fed. But yeah, keep in mind we've got next week we also have BOC and the ECB, so that's going to be interesting. It'll be interesting to see what we get out of there. And then the following week, we're going to have the FOMC. So that doesn't come until December 16th. So the way 2020 has been going, anything can happen in between here and December 16th. So I'm not necessarily thinking that far ahead. YM acts very differently. What do you mean? Well, I mean, while you answer, you have to keep one thing in mind. Okay, YM is just a dog of an index, right? So who looks at the only the old people look at YM, right? Who looks at, ask anybody, what's the market doing? Who's going to quote you YM? Trump and maybe some other, you know, Kudlow, but so it's poorly constructed index. It's a mess. And on top of it here, you've got all those transports and stuff. So it's very messy. So all, you can watch it, just look at it. You can see pre-market. We've discussed this in the past, pre-market, you see you've got like all the old blue chip companies that are bid up. There's no point in trying to short YM. You had those days where pre-market already, you had Boeing, Walt Disney, all those banks, everything up 5-6% pre-market. There's no edge, right? There's no point. Equally, right? If you come in pre-market, you see all those blue chips because of COVID or whatever's going on heavy, then it's likely going to stay heavy. So it's just kind of like the construction is very different. But I mean, I know very few, active traders that are like, oh, YM is my main instrument, right? I think it's interesting, especially if you want to put on a pairs trade, you want to trade it against something else. Oh, there you go. So it's official. Auntie Yellen is back as Treasury. Well, nominated. What do I think about it? I think on one side, you can say, well, apart from the fact that it's a lock, because remember what she said, that we're never going to have another financial crisis in her lifetime. So, but joking aside, I mean, on one side, you could argue that that whole Fed, Treasury, etc., independence is a little, now it's just like all one incestuous kind of thing. And so you could argue that it's not morally right. But on the other hand, government's got to do what the government's got to do, right? If you were in their position, what do you want to do? You want to let everything crumble, or you want to make sure you can save face, save the economy, and have everybody working together? So on that perspective, it's probably not a bad call. But again, you know me, I'm not too bothered, right? I'm a lot more focused on seeing what I can trade. I tend to, all these things, I don't, there's nothing you can do about it. So yeah, here, I mean, I would definitely not want to be short here, long the open, and I especially would not want to be short the close today. But we'll have to see. You see how everything's stalling now. What's happening now? On the other hand, 8 minutes to the end of the session. So if you have any comments or any questions, shoot. Here as the equities are stalling a little bit, right? What are we seeing? Well, you see, got a little bit of a stall in euro. This is also very nice risk reward, right? Same thing. Also on cable, Aussie, Kiwi, CAD bids coming in. You see how it's just very usual, always seeing equities down, dollar up, dollar down, equities up, right? So it's just that, and that's trading. So also sooner or later, the dollar's bound for a little bit of a bounce, and maybe now that everybody's uber bearish is the time where we can shake some weak hands and trade that to the long side a little bit, then get all the latecomers to the short DXY trade shaken out. And then when they get shaken out, we can get back short. That would be ideal. But again, here for the rest of the day on the equities, again, last day of the month, except I do not want to be long equities today. And if you're looking at, yeah, and you see also crude is down, everything's moving in sync kind of, right? So if you're looking at Forex, preferred play remains to look for tactical shorts on euro, EJ. EJ down will be equities. It'll tend to trade together, right? So fairly similar trades. Yeah, exactly. Somebody picked it up. Today's the blog birthday. So I might do stay tuned on Twitter. I might send out a link later on and I might do like a free session, take questions, see if anybody has some good questions or something. Or I might just post this. I might just post this on the blog. Okay. Last minutes, any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Thank you, sir. Yeah, exactly. Just need to be patient, right? Need to be patient, see if anything sets up. And again, it doesn't mean, right? It doesn't mean something doesn't have to set up, right, every day. And then something may be setting up for somebody else who looks at markets in different ways, right? But you just have to be very relaxed and zen about these things. Okay, last chance. Comments, questions, anything anybody wants to look at, anything anybody wants to discuss? Yeah, exactly. Let's see what shapes up. Tomorrow and Wednesday we've got Powell testifying, so maybe something will come out of that. We've got non-farm payrolls at the end of the week, so let's get this first day of the week and last day of the month over, and then we can tackle December and see what else shapes up. Okay, rock and roll, guys. I'll send out the recording. Thank you for flying with 50. Wishing everybody an awesome, awesome rest of the day. And let's see what we get. Okay? Rock and roll. All the best, guys. Take care.